Lots of economic data out of the US, and it seems that things are getting better there. Let's look at that ISM number now at 52.9, above that 50 level, and it seems that most ISM numbers globally are now showing some kind of growth, except for South Africa, of course. We came in at 39.3 yesterday.
Yes, our numbers are slightly lower than the rest of the world, of course, because we went into the recession a bit later and everyone expects us to come out a bit later. But looking at these numbers that have been coming out recently, they've all been positive, above expectations, and the market always falls when the news comes out. That leads us to believe that basically the market has priced in a greater than currently the expected recovery as we are seeing right now. They are saying, when we got those earnings numbers coming out earlier, we saw basically huge increases, a huge surprise on the upside. I'm talking about 100+% for many companies. And though we are seeing a recovery coming through in the economy of the developed world, etc., we are not seeing the kind of numbers that we saw in the earnings side. Therefore, the market may have been expecting a lot more than basically economists were expecting.
Just taking a look at those pending home sales, also jumping at 3.2%. It's the highest level since June 2007. So also showing a recovery there, keeping in mind that the recession actually all started and all culminated from the housing sector.
Oh yes, most certainly. Like I said earlier, the numbers are great. I mean, if you look at it just basically what we expected, what actually comes out, what they actually mean, the numbers are showing improvements. They're showing basically the world economy is recovering to a certain extent. We aren't falling to anywhere near as fast as we were before. In some places we are actually showing improvements. However, the market is pricing in quite a bit more than what we are actually seeing right now. And that's why even when we see a positive number like that, like the durable goods number from last week, for instance, it was very good. We had the GDP number that was very good. And every single time the market just fell.
South Africa lagging, as I said, PMI yesterday came through at 39.3 in August from 37.3 in July. We've also got to keep in mind that a stronger rand is going to impact our manufacturing sector. Where to from here, and how far away are we from hitting that key 50 level?
Yes, of course, as you mentioned, 50 is basically break even, where you're not increasing and not decreasing. And so even though we have a 39, which is an improvement from the previous number, it still shows that we are falling, but just not falling at the same quick rate that we were before. When we actually see a return, I'm not quite sure, because basically the world economy has turned around, but based almost totally on government infrastructure spending, government spending on other sectors of the economy, etc. It's not sustainable. The government doesn't generate any income, it just spends the income. It doesn't create any more production in the countries that they're involved in. And therefore, until we see demand coming back in the rest of the world from the private sector, we're not going to see this kind of sustainable recovery coming through. We're not going to see basically a sustainable recovery in our country as well, because we depend so much on the foreign economies. Okay,
just looking at the US ADP numbers set to be released later today. Those are also going to be quite key as to what we can expect for unemployment on Friday.
Oh yes, most certainly. This is of course non-farm Friday coming through. This is one of the more important numbers for the US economy. The employment number is of course a lagging indicator. Basically, it means that we will not see the employment number improve until we've seen the economy improve substantially in the US. People normally talk about, a 6 month, 1 year lag between the economy improving and the employment number improving. However, it is a psychologically important number because it does involve people on the ground, on the actual consumer in the American economy. And if he sees basically that there is a recovery in employment, he might be more likely to spend, and that might actually be the start of the real recovery.
Well, speaking of consumers likely to spend, Cash for Clunkers program doing quite well. We did see some of the numbers disappoint yesterday from those automakers, but others reported relatively good numbers. What do you make of that program? Do you think that is sustainable?
I don't think it actually is. I think it actually was a bit of a false start, because what you basically did was you caused everyone that wanted to buy a car, either in the last 3 or 4 months or the next maybe year or so, to basically buy a car this month. The reason being is that they got the best possible deal over this period here that they were going to see for quite a while. So therefore you had a whole bunch of buying coming through. People were saying that dealerships were basically stockpiling deals for that first week of the Cash for Clunkers deal. And therefore you would see basically, I think, this deal stealing away demand from next year even. So that's one thing. The second thing is that the main beneficiaries of this deal were actually the Asian car makers, Toyota, Hyundai, etc. They were the big actual beneficiaries of the deal. So I don't know how wise it was for the Americans to basically support the Asian car makers.
So really just trying to show that demand is growing regardless of what the future is going to basically hold in terms of the consumer.
Yeah, the demand was for that month. I don't think it's going to be something that's going to lead through for the next year or so.
Okay, well, just taking a look at the Eurozone, GDP set to be released today, and also quite an important number in the South African sense, considering that our biggest export partner is Europe. What are you expecting today from there?
I don't think the EU is recovering to quite the same extent as the US is. I mean, the Treasury was a lot more hawkish when it came to interest rates. Then Ben Bernanke went in and he just basically cut as quickly as possible. You remember a year or so back, Trichet was still worrying about whether or not there actually is a recession, etc. A year plus back. So I don't think the ECB is in this has been as aggressive as the Fed, and therefore the EU will not recover as quickly. However, if you look at our trade numbers that came out previously, we looked at an improvement that was above expected numbers. The reason being mainly people were citing the fact that we were trading more with the European Union. So I could be surprised on the upside on that.
But isn't that trade number also just a function of the fact that we've got very weak imports rather than really strong exports?
Oh yes, of course, we are being helped by the fact that our imports are weaker, but there was a surprise on the export side as well. The European Union was buying more from us than we were expecting.
Okay, also in terms of the South African sense, just looking at that trade number, many said that that's basically going to show to better current account deficits, and that's going to add more support for the local currency. Do you agree with that? And what are you expecting on that front? Because it is very volatile numbers that we're looking at right now.
The currency seems to be in a bit of a range at the moment, 50 or 60 cents, say about 30 cents below 8 and 30 cents above 8 rands. The question is, what's the exact, or what the correct number for a country like South Africa? If it gets too weak, we can have problems with inflation, and then the government will have to do something about that. We saw the oil price go up, we saw the petrol price go up accordingly. If the rand weakens too much, we will have more problems with inflation, because we do import quite a bit of what we consume. On the other hand, our exporters are suffering if we have too strong rand, because dollar price, etc. We will have problems with people such as the commodity producers, etc. So there is a fine balance to be discussed there. I think on overall, we'd rather have a weaker rand for the general wealth of the economy, and then basically try and make South Africans basically spend a bit less on imports.
Just taking a look at the oil price, you mentioned the oil price, and it has been in the early 70s for some time now. China hiking fuel prices to a near record high. Quite an interesting move by the Chinese government to do that. Oh
yes, the Chinese economy has been rocketing in the last 6 months or so. People are saying, they basically have escaped the recession and whatnot, and their economy, and also their market has been doing quite well. However, the last month they've had quite a huge fall. I mean, when we had basically global markets still going up slowly, we had the Chinese fall dramatically over the last month or so, and that's mainly based on the fact that the government thinks there's a lot of froth in the economy. They had huge imports of iron ore coming through, and I think people were saying about 45% of that was due to just speculators and traders. The government is a bit worried right now. I think perhaps that they've been a bit too aggressive in terms of loosening monetary policy, in terms of basically stimulating the economy. I think they are going to have to basically pull back a little bit in terms of basically trying to cut down on some of these imports that are coming in, because the economy may be overheating there. But